Peter McGuire is joining us from XM and is he in our Sydney CBD studio. Peter, thank you so much for joining us. And I must say as well, thank you for the very generous Christmas gifts you dropped over Santa Claus a little bit earlier on. Let's talk oil, shall we? How to make sense of some of these wild swings. You've got competing factors, I suppose, really concerned about stockpiles, concerned about global growth. I mean, how do we really, make sense of the two and the moves that we've seen in oil?
Well, good afternoon, Nadine. I'm not sure how you make sense of it, really. When you're thinking and put your mind back to October and what we've seen as far as that washout, I think it's very hard to understand, how a heavy sell-off like that can take place. Then you can have a rally the other night of up 10%. Then you can have it come back a little bit from there. It just demonstrates one clear thing, that there's volatility, there's uneasiness in the market. We're looking at spreads as far as bonds. You're looking at what's happening as far as inverted yield curves, Fed, President Trump and the Dow. It's a very interesting end of year, Nadine. Very interesting at all.
Yeah, so how are we looking when it comes to, I suppose, OPEC? I know you were just, traveling around the world really following this narrative. We did have an agreement on production cuts, but how do you see that panning out in 2019?
Well, that's going to take place and going to start in the next couple of days as far as 1st of January kickoff. Now, there's no doubt that are those cuts going to be enough of a stimulus to try and get some pricing back in from the producer's standpoint. There's a lot of there's every consumer in the world, I think, is very happy with the current price of crude, or even cheaper. So and their spending power, and the only people that aren't very happy about it naturally are the producers. So I think that there's a very solid push that they want to probably look at further cuts coming into February or March, and they'll try and stimulate the market and try and push it higher from here. But there's so many moving parts and so much, I suppose, noise in the market. What's happening as far as Dow washouts? What happens as far as the Brexit issues come 14th of January and leading up until the end of March? And then you roll everything over to Germany, Italian bonds, and then China. Don't forget, their stock market's down $3 trillion worth of value in the last 11 months, Nadine.
Oh, certainly. I mean, there's so many different sort of narratives that we can pick up on. But when it comes to the outlook for gold then, Peter, because we've seen the safe haven buying in gold to end 2018, when there were times this past year that, everybody was scratching their head as to why we were not seeing more buying in gold, when there were so many unknowns and so much risk and the threat of inflation out there. So what continues the gold narrative as we push into the new year? Is it just, again, this risk out there?
Well, I think it's risk, but I think the other side also, after those 4 rate rises by the Fed in 2018, it really put a little bit of a handbrake on. You had a very strong dollar index. Just for the viewers' sake, that was around about 88, 89 as far as that US dollar index, took it all the way to 97. So it's a very strong push up by about 11 or 12%. And taken on board in that side, gold's been in a little bit of a holding pattern. It's rallied a little bit, but I think 19 will be a breakout year for it to the upside because of so much uncertainty. As I mentioned, the Brexit issues. Does the Fed raise rates? Oppenheimer, I saw an article yesterday. They're saying there's a 50% chance that you could see a rate cut in 2019, the first one. So, and I'll just listen to your previous guest, Chris Weston, discussing those frameworks. And so there's so many different moving parts, so much interest. I think gold's going to have a stellar year over the next probably 6 to 7 months.
All right, we will be watching that one with much interest. You're also following commodities quite close, or currencies, I should say, obviously in the context of commodities. What is the most interesting currency pair in your view right now, Peter?
I have to keep a close eye on British pound. I think it could really, ratchet up to the upside due to the Brexit issues. See what happens there over the coming weeks. If Theresa May puts something to bed there, then I think the pound will take off. It'll be an enormous trade for the first 6 to 7 weeks of the year, and that'll run it all the way through. I think it'll just build momentum until the end of March. So there's one to keep an eye on. Keep an eye on what happens as far as that US dollar index, and if there's further sell-offs there in the Dow, if the American stock market takes a hammering to the downside over the first 3 to 4 weeks, I think there's been a lot of pressure on the US dollar to the downside, and I think everything will push up from there. Look at the Swiss franc from that gold side of it, and keep an eye on the yen. What else is there? I suppose that's you know, there's a basket there to keep an eye on as far as all of the crosses.
No rest for the wicked, Peter. Peter McGuire, XM, thank you so much for joining us.